Assalamualaikum warahmatullahi wabarakatuh. My name is Muhammad Arif SOFIYYUDDIN bin MALEK. My metric number is 18BD05007. So today, our group are going to present to all of you about loan pricing policy and the role of OPR to the Malaysia economy. So let's begin with the loan pricing policy. So what is the meaning of loan pricing? So loan pricing is the process of determining the interest rate for granting a loan. So let's say, for example, a customer borrow money from the bank, there will be an interest applied on the loan based on the rate that's been decided by the bank. So let's say the rate is 5%. Loan pricing is showing the process on how and why does the bank decide to put that 5% when granting a loan to the customer. Okay, there are two systems or framework that are under loan pricing policy, which is base lending rate (BLR) and base rate (BR). And this slide are showing the difference between the two. Base lending rates has been used since 1983 and has served as the main reference rate for floating retail loan rate until 2nd January 2015, where it has been substituted with the new policy of the base rate system. The change is actually a good thing because base rate provide a better transparency from bank for customer to make a wiser decision, while BLR based lending rates were often said to lack transparency, and banks unscrupulously or secretly lower their BLR to attract a customer. And during BLR, rate was set by the Bank Negara Malaysia (BNM) based on the cost of lending money to other financial institutions, and the cost to borrow money was set by the overnight policy rate fixed by the central bank. But under the new base rate system, banks in Malaysia can preset their interest rate based on a formula extended by the central bank. The rates are determined by the bank cost of fund and standby statutory reserve requirement, which is SRR. And the new BR framework will also enlighten on the consideration of other loan pricing components, including operating costs, liquidity risk premium, borrower credit risk, and profit margin. And that's all from me. Without further ado, I will pass to my friend to continue the presentation. Thank you. Okay, there are two systems or framework that are under loan pricing policy, which is base lending rate (BLR) and base rate (BR). And this slide are showing the difference between the two. Base lending rates has been used since 1983 and has served as the main reference rate for floating retail loan rate until 2nd January 2015, where it has been substituted with the new policy of the base rate system. The change is actually a good thing because base rate provide a better transparency from bank for customer to make a wiser decision, while BLR based lending rates were often said to lack transparency, and banks unscrupulously or secretly lower their BLR to attract a customer. And during BLR, rate was set by the Bank Negara Malaysia (BNM) based on the cost of lending money to other financial institutions, and the cost to borrow money was set by the overnight policy rate fixed by the central bank. But under the new base rate system, banks in Malaysia can preset their interest rate based on a formula extended by the central bank. The rates are determined by the bank cost of fund and standby statutory reserve requirement, which is SRR. And the new BR framework will also enlighten on the consideration of other loan pricing components, including operating costs, liquidity risk premium, borrower credit risk, and profit margin. And that's all from me. Without further ado, I will pass to my friend to continue the presentation. Thank you.
Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. My name is Muhammad ALIFAIZUDDIN HAJI ISNIN and I will be continuing the presentation. And my MIT number is 18BB05009. Okay, why bank list rate converted to bank rate? Why change? So as you can see on the slide, unlike a fixed rate under BLR, BR is determined by bank without intervention by the central bank. So as you understand from what been presented by my colleague just now, the BLR are provided by CBM or Central Bank of Malaysia, BNM, based on their factorization. So when the Central Bank of Malaysia provide the BLR, so the bank can use either discount rate or based on the creativity of bank to gain the customer or to attract the customer. But even though bank is determine the BR by themselves, it is being formulated by Central Bank of Malaysia or BNM to standardize the rate. How does CBM formulated the formula to standardize the rate? By calculating the commitment of the customer, by calculating the current economy position, and etc. Differ from bank to bank depending on their efficient in lending is what I mean by the bank either can change in rate in the BLR situation before, but now as bank using bank rate, bank are using their own creativity to make sure the loan that they giving are efficient to the lender. Bank with a strong niche is consumer bank. Bank in a strong niche in consumer financing able to offer more attractive and competitive bank rate and effective lending rates for their customer. So what is effective lending rates? Okay, I will continue to the next slide. So this is the rough picture or diagram about the conversation from BLR to BR. So I will explain with more of it easier understanding. So let's look at the next slide. So comparison of bank rate and bank list rate. So let's say we are applying for loan to buying a house that a loan amount of 500,000 ringgit Malaysia with a no lock-in period and the tenure of 35 years. Okay, based on this slide, you can see the differentiation between bank rate and bank list rate. Okay, the reference rate are the rate that provided by the bank. As you can see from BR, that is the bank being formulated by the Central Bank of Malaysia, 3.25% of reference rate, while BLR, they are 6.9% of reference rate. So let's assume this bank provide interest rate of 1.5% for bank rate, while on BLR, the bank give a discount of 2.1% in interest rate. So that is effective lending rates. Effective lending rates is the reference rate plus interest rate, while in BLR, the interest rate is a discount, so it's mean reference rate minus interest rate. So that is what effective lending rates are. So based on the diagram in the slide, you can see that in bank rate, the effective lending rate is 4.75%, and in bank list rate is 4.8%. So you will get the monthly installment as stated on the diagram. So how did we get the monthly installment? It is calculated by the bank, but we can count it roughly by we can count it roughly by just Google. You just Google the home financing calculator and they will giving you a column that you will need to fill either the loan amount, the tenor, and the rate. And when you fill in the blank, you will get your roughly monthly installment. So that is what you can see. So this is an example of how BR and BLR being compared. So let's look at the clear example. So this is the source from Bank Negara Malaysia as at 6 August 2020 for conventional bank. So you can see that is the base rate, base lending rate, and the effective lending rate based on the source from Bank Negara Malaysia as at 6 August 2020. And for the next slide, there is for Islamic bank. So as you can see, you can compare either base rate and base lending rate is more effective, which is more effective. So that's all for me, and I will continue the presentation for my colleague. Thank you.
Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. How are you guys? Let me introduce my name. My name is NORHAIRILIMAN bin SHAHRIZAL, DIN BB 05008. Okay, we go to the first slide. What is the overnight policy rate, which means OPR? The overnight policy rate, OPR, is the minimum interest change among bank in the interbank market, which they borrow fund from each other when a bank has fund deficit to make withdraw demand from depositor. The bank will borrow from other bank which an excess fund, and the OPR is determined by Monetary Policy Committee MPC of Bank Negara Malaysia that meets 6 times annually. The OPR level will influence interest rate in other market, including credit market, as OPR is the primary references rate. When OPR is lowered, other interest rate will be guided accordingly, and vice versa. Okay, the next slide, we can see up and down rate OPR in that year, in 2006 and 2019. Why did the direction OPR either going downward and upward depend on the economic condition and its outlook. Ultimately, the goal of revising OPR is to bring the economy at an optimum level. When the economy is growing a slow rate, the OPR will be received downgrade to decrease the interest rate. Lowest interest rate allow consumer and business to have access to money at a lower borrowing cost, hence incentive them to increase spending and investment. This will lead to an increase in economic growth to be an optimum level. On the other side, when economy is growing at a faster rate, the OPR will be reversed upward to increase the interest rate. Highest interest rate make borrowing cost expensive to consumer and business, hence reducing spending and investment. This will prevent the economy from overheating, which could lead to inflation. And the OPR the overnight policy rate (OPR) will impact the price of bond in the market. As I mentioned before, the overnight policy rate is benchmark to the market interest rate. Price of bond have inverse relationship with the market interest rate. The price of existing bond in the market will be increased when the market interest rate decrease. The reason for this because the greater demand for this bond which offer high interest rate compared to new issued bond in the future. After the market interest rate is reduced, any new bond issued will have lower interest rate in line with the reduction. The interest rate of old bond issued before the market interest rate reduction will not be affected, as the old bond offer a high interest rate. Rational investor who are looking to higher interest rate will demand this old bond to increase the price. Conversely, the price of existing bond in the market will decrease when the interest rate increase. The old bond have lower interest rate than new bond, which this new bond will be issued with a high interest rate in line with the market interest rate. Like investor will demand less for old bond due to the decreasing the price. It is very important for any investor to distinguish between the bond yield and the bond coupon. A bond coupon rate is a rate of interest it pay annually, while it's a yield is the rate of return it's generate. Okay, we go to the next slide. Okay, before we go to monetary policy, I would like to introduce what the monetary policy is. That a demand side of economic policy refer to the action undertaken by nation central bank, which know the Malaysia as BNM, Bank Negara Malaysia, to control money supply and achieve microeconomic goal to promote sustainable economic growth. Monetary policy consists of the management of money supply and interest rate, aimed at meeting macroeconomic objectives such as controlling inflation, consumption, growth, and liquidity. And this is achieved by the actions such as modifying the interest rate, buying or selling government bond, regulating foreign exchange, forex rate, the changing the amount of money bank required to maintain as a reserve. And the monetary policy is formulated based on an input gathered from variety of sources. For instance, the monetary authority may look at economic numbers such as gross domestic product (GDP) and inflation, industry or sector specific growth rate and associated figure, as well as geopolitical development in international market, including oil embargoes or trade tariff. This entity may also further concern raised by group representing industries and business. Survey result from organization repute and input from the government and other incredible sources. Okay, we can look the list of member of MPC, which Dato' Nur Samsiah Yunus, Dato' Abdul Rashid Ghaffur, Norzila Abdul Aziz, Jessica Chu Cheng Lian, Marazuni Hisham Omar, Dr. Norhana Endot, Dr. Norzaidi Elias, and last Datuk Dr. Gan Wee Beng. Okay, thank you. We will go to the next presenter.
Assalamualaikum warahmatullahi wabarakatuh. My name is NURDAYANA ELISSA binti AZIMAN. My matric number is 18BB05053. What is the role of OPR in the monetary policy? The first one is to provide the monetary authority of a country in regulating the supply of money and to stabilize the growth of economy by influencing the level of interest rate that borrowers have to pay on their loan and depositor earn on their deposit. During the peak of economic overheating and when the threat of inflation high, monetary policy will be tightened by withdrawing funds from the banking system and raising interest rate. The higher interest rate will encourage people to save more and spend less. It will also make it more expensive for people to borrow money. This will cause consumption and investment to slow down to a level that is more sustainable and reduce the prospect for high inflation. Conversely, when economic conditions are weak, funds will be injected into the banking system to reduce interest rate. Spending and borrowing will increase. The resulting increase in consumption and investment will stimulate further economic activity, leading to higher income, employment, and economic growth. The second one is an indication of the core of monetary policy. OPR serves as a signal to showcase the core of monetary policy and as the central bank target daily liquidity operation. So every change in monetary policy will be benchmarked for any changes in OPR, but also primary reference rate in determining other market rate. Moreover, OPR is the benchmark for commercial loan and deposit rate. Lastly, increase or decrease the interest rate in order to achieve macroeconomic objective. So, monetary policy will influence the aggregate demand of the country in terms of three components: consumption, investment, and net export. Bank Negara Malaysia use interest rate targeting for the time being. By using monetary policy, Bank Negara Malaysia can increase or decrease money supply as well as the interest rate. Bank Negara Malaysia will set monetary policy based on different economic situation, whether inflation or recession, by increase or decrease the interest rate in order to achieve macroeconomic objective. The factor of influencing the OPR in Malaysia is global economic. The ongoing COVID-19 outbreak has disrupted production and travel activity, especially within the region. This has also led to greater risk aversion, resulting in tighter financial condition and resurgence in financial market volatility. The COVID-19 pandemic has evolved into global health crisis that is causing a sharp growth slowdown in affected countries, including most major advanced and emerging market economies. The measures taken to contain the spread of COVID-19, including travel restriction, enforced business closure, and restricted social activity, while critical are suppressing private sector activity, both in domestic-oriented and tourism-related sector and manufacturing sector. The pandemic is simultaneously causing demand and supply shock through weaker final demand and supply chain disruption. Prospect for global growth will depend on how fast the pandemic is contained and stopped. Lastly, expansionary monetary and fiscal policy. Bank Negara Malaysia conduct its monetary policy by influencing the level of interest rate. A primary tool used by central bank is OPR. So, expansionary monetary policy aims to increase money supply. It used to control unemployment and inflation. How Malaysia government set monetary policy to fight recession and inflation? In a recession, real GDP is lower than potential GDP. This leads to high unemployment due to some firms operating below normal capacity. To reach its goal of high employment and overcome recession, the government need to carry out an expansionary monetary policy by increasing the money supply and decrease the interest rate. Then the lower interest rate cause an increase in consumption, investment and net export, which increase the aggregate demand. Fiscal policy, a policy that is used by federal government to stimulate economy activity during recession and employment rate. Jadinya, apa yang kerajaan ni buat untuk fiskal ekonomi ni, mereka meningkatkan bantuan kerajaan dan mengurangkan teks. So sekarang ni muka COVID, kita punya perkembangan ekonomi ni berkurang, jadi kemungkinannya akan berlaku masalah recession dan employment. Sebab tu kerajaan memperkenalkan pakej prihatin. Kerajaan belanjakan almost berbilion untuk stimulate ekonomi dan reduce tax untuk small medium enterprise dan corporate tax. So diorang akan keluarkan production yang banyak dan ekonomi akan bertambah pesat. Terima kasih.
Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi taala wabarakatuh. My name is SYAMILAH HAMIMI binti MOHAMMAD AZHAR. My number is 18 PP05035. So, I will continue my slide about the impact of the OPR. The change on the OPR will influence directly impact to the ordinary citizen, which will help them to cope with the high cost of living. So, this is some impact of the OPR, which is base rate and base lending rate. Understanding of base rate is base rate is an interest that banks refers to it before it decided on the interest rate to apply for your home loan. The rate is derived internally based on how much it will cost the bank to lend you the money and takes into a minimum interest rate set by the Bank Negara Malaysia. So the prior of the 2015, the interest rate was referred to as base lending rate. And M used the OPR as the benchmark to determine the cost of the lending. Back to the impact, the change on OPR in influence floating rate loans, where the bank will adjust the lending rates by AZIMAN pattern. A few days after the announcement, maybe reduce the interest rate by the 20 basis point, whereby the current BR is 3.20% lowered to 3%, and the current BLR 6.85 reduced to 6.65. With this, buyer will have to fork up the lower monthly pay to service the mortgage compared to before. And if the rate is maintained, the saving will be higher in the long run. The second impact is saving and fixed deposit. The OPR card is however not such a good news for the public who have the higher saving and fixed deposit. So the public can be getting a lower interest rate compared to before. Hence, the interest earning will drop. And the last impact to the Malaysian Real Estate Investment Trust and REITs. Malaysia Real Estate have seen improvement following OPR reduction. The card guarantee more saving, and